Right. Ever wondered what really separates a successful business from one that's just constantly putting out fires and, losing money? Well, a lot of the time, it's something you can't even see. It's called internal control, and today, we're going to pull back that curtain.
Okay, so let's just kick things off with a little thought experiment. I want you to picture a business with absolutely no rules, no oversight, nobody double-checking anything. It sounds like pure chaos, doesn't it? Well, that's because it is. It's a total recipe for disaster.
And look, this isn't just some textbook theory. When you don't have controls, a business starts to, it starts to leak. It leaks cash, it leaks efficiency, and maybe worse of all, it starts to leak the trust of its customers and investors.
I mean, just look at this slide. Your cash can literally just vanish. The financial records become a complete mess. You have no idea if you're actually making a profit. Fraud becomes almost a certainty, and your day-to-day operations just grind to a halt. So the big question is, how on earth do you fix this?
Well, you fix it with a system. A thought-out, deliberate process that management puts in place to direct and, control the business. This, right here, is what we mean by internal control. It's the answer to all that chaos.
Now, what's really interesting here is the official definition from the ACCA notes. You'll notice it kind of has two jobs, right? It's not just about stopping the bad stuff like errors and fraud. It's also about making sure the good stuff happens, making sure the business runs smoothly and efficiently.
If you really want to boil it all down, it comes down to these three powerful words. They are the absolute heart of internal control. First, you've got to safeguard your assets. We're talking cash, inventory, the whole lot. Second, you prevent errors before they even happen. And third, if something does slip through, you detect it as quickly as possible.
So that leads us perfectly to the two main lines of defense you're going to find in any good control system. Now, listen up, because this is a classic exam topic, and people get mixed up all the time. But it's simple, really. It all just comes down to timing.
And this slide just nails the difference. Think about it like this. Preventative controls are like the lock on your front door. They're there to stop trouble from ever getting inside. Requiring a manager's signature before a big payment goes out, that's a classic preventative control. On the other hand, detective controls are like your security camera. They don't stop the break-in, but boy, do they show you what happened afterwards. A bank reconciliation at the end of the month that finds a mistake, that's a detective control.
All right, now for the big one. This is probably the single most important, most powerful, and most tested preventative control there is. It's called segregation of duties. And honestly, the concept is just genius in its simplicity.
Let's just walk through this real-world example. It makes it so much clearer. The whole idea is incredibly powerful. No single person should ever control a transaction from start to finish. So, one person requests the laptop. A totally different manager has to approve it. A third person, someone in finance, makes the payment. And then a fourth person comes in and checks the bank statement. See how that works? By splitting up those key jobs, you make it way harder for one person to commit fraud or make a big mistake that goes unnoticed.
But here's the thing, and it's a huge thing. You can have all the rules and all the segregated duties in the world, but they are completely useless without the right foundation. And that foundation is what we call the control environment. Really, it just boils down to the company's whole attitude towards control.
And this slide just says it all, doesn't it? It's all about the tone at the top. If the senior managers are strict, disciplined, and they take this stuff seriously, that attitude filters all the way down, and you get a strong control environment. But if they're careless, if they've got a lax attitude, the entire system is fundamentally weak. And it doesn't matter how many rules you have written down in some dusty manual.
So, look, if you remember just one thing from this entire explainer, please make it this. Preventative is before the event, detective is after the event. That simple little line cuts through all the complexity, and it's the absolute key to understanding how all this works. So, the final thought I want to leave you with is this. Have a look at your own workplace, or any company you know, really. Are their systems focused on prevention, on locking the door before trouble even starts, or is everyone just running around cleaning up messes and checking the security footage after the damage is already done? The answer to that question will tell you everything you need to know about the strength of their internal controls.